So glad you could join us today. I'm Marlon Bowling with you, and we're going to take a look at our grain market activity to open up the week. Let's go ahead and go to the corn board here and take a look at our first quotes provided by Bar Chart. We are still a little higher, but we have come off of the overnight highs a little bit. March corn currently a penny and a quarter higher in the early going. We're at 647.5. In soybeans right now, you have the January 10.5 higher. Look at that, 14.49 per bushel. Just a penny and a half from its overnight high. March beans now 9 3/4 higher, make it 9 1/4 higher now at 14.55 3/4. That would put it 2 cents from its overnight high. Let's take a look at wheat. We'll start in Chicago. But now this is interesting. We have the March contract now turning lower. We're down 9 1/4 at 7.51 3/4, almost on the low of the day. Gosh, last night we were as high as 7.86. So the wheat market has flipped around here this morning. In the Kansas City market today, we have the March now at 8.64 1/4. That would be down 6.5 cents, and it's 13 cents off of its overnight high. What's that all about? And now we're on the low of the day at 8.63 1/4, down 7.5 cents. So something got into the wheat market here in just the last few minutes. Now on spring wheat in Minneapolis, at last check anyway, the March was half cent higher at 9.21 3/4. But it looks like it's taken a downward turn too. Let's go to Dewey Strickler of AgWatch Market Advisors and find out what is going on from his perspective. Dewey, good to talk with you here. Looks like the markets are just starting to slide all of a sudden here now that we're up and running on a Monday morning. What are you looking at for direction here in the early going this week?
Well, first of all, you got to take a consideration, Marlon, that we are looking here at the 5th of December, and you've got some of the professional traders' funds are going to be taking some money off of the table here. So you're going to see some of these unexplainable moves in the market, and I would just take them as a grain of salt.
All right. So does that still fall into play? Because I know you follow Elliott wave theory, and does that screw that up any when you get into thin and choppy volume like what we see this time of year, or does it still hold true?
No, you have to look at it two perspectives. One is short term. Yes, things can change short term, but longer term, no, they should be pretty much as what the long term wave counts show there.
All right, so let's look at a 6-month March corn chart. What do you see there?
I see, as far as 6 months, first of all, it's going to expire. What I would look at would be a period of consolidation develop here. Here's the thing you got to look at, Marlon. You got to look and see what our exports are doing. They're absolutely horrible. We're looking at our pace of shipments for corn are down, say, 45% below their 5-year average. So it's hard to get a market moving up unless we have some really bad adverse conditions develop in South America. And right now, you got a few problems in Argentina, but nothing's going to push us up here to new highs.
All right, so that was the case on corn. How about the soybeans with that same background?
Same background. We're looking at good conditions overall in South America. What I've noticed is since the first week of November, our pace of shipments of beans have declined about 11%, and shipments to China are off about 13%. Now, historically, we see beans peak as far as exports in the month of November, and they decline on average anywhere from 65 to 85% until the end of the marketing year.
And again, historically, January beans at 14.45, still not a bad price, right?
Not a bad price at all. No, sir.
All right. We'll pause right here, and then Dewey will change our focus. We'll go and see how the livestock trade is opening up here on a Monday when we come back. All right, let's take a look at our live cattle trade with our quotes provided by Bar Chart. And on live cattle this morning, well, boy, they act sleepy. We have February now a nickel lower at 155.82. April unchanged at 159.57. Man, that is a dull market this morning. You have June live cattle down just a dime in the early going here. Meanwhile, in the feeders, now they're a little more perky. We have January 97 higher at 183.42, and the March feeders currently 60 higher at 185.87. I will note that the most strength is being shown in the nearby contracts, January and March. They are definitely leading the charge. Now on lean hogs, this is how we're opening. We have February a nickel lower at 90.37, and you have April 20 lower at 95.62. So not much going on there either. Let's go back to Dewey Strickler here first. On the cattle side of things, we had a cash cattle trade last week, Dewey, that kind of surprised a few folks in how strong it actually was. I don't know if the volumes were that great, though. What do you see happening this week now that we're kind of into a holiday mode here?
Well, first of all, I think you're going to be looking at a little bit of erratic move in the meat market here. The thing that I saw, or what got my attention, is that the funds are pulling in their horns a little bit, reducing some of their longs in both the cattle and also the hogs here. So that just tells me they're going to take a little profit here before year end.
How are the packer margins running these days? Have you heard?
Well, they've pretty well, are changed from day to day. They're pretty erratic and so forth, and that's what's made some of these markets see some pretty sharp swings here.
Well, we're looking at a 6-month February live cattle chart here, and I was mentioning earlier where we're within just a couple dollars of our contract highs there. Do you think those highs are safe, or do you think they may make another run at them here this week or two?
I think they could make another run at them here, Marlon. If they would get up and say make a new high, you might see the Feb hogs get up to about 95, but I don't have a lot of confidence in it.
All right, now what about the outside markets? Let's go ahead and take a look here at the Dow. Also the dollar, we have the Dow now 238 points lower on December futures at 34,221. The U.S. dollar index this morning. It's currently trading pretty flat, just 20 points lower with December at 104.480. And then on the crude oil trade for West Texas crude, we have January up $1.25 this morning at 81.23. Do you see more upside there?
Maybe a little bit more on the crude. As far as the stock market is concerned, that could be just like cryptocurrency here. It's going up on just really on not very strong fundamentals.
All right. Well, Dewey, great to talk with you again here on a Monday. Thanks for helping us open up our week. Dewey Strickler, AgWatch Market Advisor. So, Tammy, that's how we're opening up. I'll have another update in about 20 minutes.
All right. Appreciate it.